Okay, so both patterns are clear: normal flag and pole and inverse flag and pole.
Yes, and do I have to buy immediately break, so I have to wait for it to close?
See, to be on the safer side, what you can do is that here, okay, 1 minute, I'll show you an example, then it will be clear to you once. See, if you see in this scenario, okay, so if you see here, then you may be able to see a pole, right? Like a pole here, right? And then you can see the right. So this is the pole and this is the flag.
The flag, yeah.
Yeah, right. So this is basically as you can see that there are small wicks are formed in most of the candles. You can see, correct. Now you have to wait for the close because you have seen that there are many candles which has formed the wick, but they were not able to close.
Yes.
Okay. So in this scenario, you may need to wait for the close. So okay. So it depends how the candles are getting formed in the flag.
Yes. Okay. But there isn't a breakout yet.
So you may need to wait for the candle like this. Like I have told you, like 60-40 ratio or 50-50 or 70-30 also you can consider.
And this I can do it on.
Yeah, 15 minutes chart you can do it, but the accuracy will be less. This I am showing you 1 hour.
Okay.
I will show you on 15 minutes also. See here also kind of flag pattern is getting formed, right?
Yes.
See here it gave a out, but it didn't sustain, and the next candidate closed down. So it's better to wait for the high to cross this high.
Okay. Yeah.
So in this, whenever there is a breakout, you can play for the target of this. This should be your target, this distance or this length of the pole.
Okay.
In this scenario, as you can see that the high is 638 approximately, and the low is 597. So 638 minus 597. 638.
You said 638 minus
597.
41.
So approximately for 41 points you can play. Approximately. Like it is not like fixed, so you should do it for 41 points. You may need to exit around 30 or 35 points also, depending on the movement at that time, how the stock or how the instrument is moving at that time. You may need to see an exit. If there is a resistance, near that point, then you may need to exit. See here, if you see in this scenario, there is a small resistance here, right? Around 647. Somewhere here.
Oh, okay, yeah.
Right. So you may need to see how the candle is getting formed there. Based on that, you may need to plan your exit. Yeah. Right.
Okay. Yes.
see in gold if we can see any flag pattern. Here it may look like a flag to you here.
Yeah.
Right.
Yes.
Or maybe best point is to do it here actually, because there are some candles formed here as well.
Yeah, and then down. Yeah.
So here is a breakout. So best point is to buy here once it crosses the high, because you can see that this candle is not like 50-50 or 60-70. There is a long wick at the top, right?
Yeah, so we have to wait.
So we have to wait. First it crosses the high here, then you can enter. This point is the best point to take the entry. So it depends on how the candle is getting formed at that moment. Based on that, you have to take your decision.
Okay.
So normally this week means there are certain sellers here. Week means, right?
Yeah, rejection.
Rejection. Here you can see that a small rejection. So you can wait here because the body is longer than the wick, right? Here you can see that it's not like that.
Yeah.
You can see 30% is the wick and 70% is the body, right? So it depends on how the candle is getting formed at that point of time. Based on that, you have to take the decision.
Okay. Yeah.
See here also you can see.
Maybe we can see some the inverse.
Right.
Yeah, this one there.
See like so this is a perfect candle breakout. Target you can see if you want to calculate in this scenario. The targets are 980 minus 4900, approximately 80 points, right?
80.
And I think you got those 80 points. Let's see. Yeah, approximately 90. It near 80 points, 75 or 80.
Okay.
Let's see inverse if we can find anywhere. Because normally inverse you will be able to see whenever the instrument is in downtrend. So here
Yes. Okay.
normally the gold is in bullish trend, so it's difficult to find a bearish pattern in this scenario. Let's see if we can do that. Let's see in some other instrument. See here it is found, but it didn't execute. See,
Yeah.
it is formed here, but it failed actually because it didn't give a breakdown. It gave a breakout.
Yeah. Okay.
Second, let me, if I can show you the inverse as well.
Okay, yeah.
Okay, so it may be somewhat like you can see here.
Okay.
So here there is a breakdown and then it went down like that. So minimum need to have minimum
Yes.
minimum 5 candles are required to form this pattern as well.
Okay. I'm clear with this pattern.
Okay, fine. Okay, let's talk about the next pattern. Did we talk about head and shoulders?
No, we didn't.
Okay, head and shoulders.
We do that one now?
Yeah. 1 second, I'll share my screen, share the pattern. Okay, you can see my screen, right? Okay, so in head and shoulders, we have two types of pattern: the normal head and shoulders pattern and the inverse head and shoulder pattern, right? So this is head and shoulder bottom pattern, so which we normally use to find a breakout. Right? So in this scenario, as you can see that,
Is this the inverse? Is this inverse or is this the normal?
yeah, it's an inverse.
No, is it
Yes.
This is inverse.
Yes, yes.
Okay. So I can write inverse?
Yes, yes. Okay. Because see, head and shoulder, normal head and shoulder will be like this. It's like a human being, right? So this is the head and these are the shoulders, right?
Yes.
So that's why this is inverse. So normally this pattern takes a lot of time to get a formation. Right? So here you can see that this is shoulder 1, this is head, and this is shoulder 2, right? So the candles will be formed like this, and we have to wait for a breakout here.
Yes.
And Once there is a breakout, we can buy here. This is the buy point, entry point, and this is the stop loss area here.
Where do we buy?
We buy on a breakout like this. If a candle is formed like this,
And it closes, we buy.
we buy this. So as you can see in this chart, right? So this is the left shoulder, this is the head, this is the right shoulder, and this is the breakout candle, right?
Yes.
And there is one more point that you can enter. If there is a retest here, right? So this is a retest. So here also you can plan to make an entry. If you miss the entry here, then you can take an entry here as well, near the retest point.
Okay.
Because in certain scenarios, this breakout candle will be very big, right? So you may not enter in that candle because the your stop loss will be very high in that case. So what you can do is that you can wait for a retest here, and then you can take an entry near this area.
Okay.
The stop loss will anyways be here only. Whether you are taking entry here or here, stop loss will be here only always.
All right.
And shoulders breakout pattern. Inverse here. And this is the normal head and shoulder pattern, right? So in this, how it will be formed is formed like this.
Okay.
So this one is a bearish pattern, and here we will take a trade whenever there is a breakdown here with a red candle. Here you will be seeing a kind of red candle.
Mm-hmm.
So here you will take an entry, and your stop loss will be here.
And it's supposed to have a breakdown, right?
Yeah, breakdown.
So stop loss. Okay.
Okay, so you understood about the entry and stop loss, right? So now we have to see how to find the profit booking area or like targets, right? So you can calculate the targets based on this distance.
Okay.
So
So
explain you here. See, as you can see in this scenario, this is the left shoulder, this is the head, and this is the right shoulder, right? And here you can see there is a breakdown here, right? This is a breakdown.
yes.
So your stop loss will be here.
Okay.
And how you will find the targets? Like this distance you can calculate.
Okay. Yeah.
It's 14.4 minus 12.8. It's 12.8. So 1.6 points from the breakdown area.
Okay. Okay.
Okay, so similarly, there also in progress also, you have to take the targets based on this distance.
Okay.
Okay, this is clear.
Yes, this is clear.
Okay, I'll show you some examples. Okay.
Okay.
Right. So there is a breakdown here. You
Oh,
can
okay. Yeah.
Since this pattern takes a lot of time in formation, whenever there is a breakdown or a
Yeah.
breakdown, the targets will be like huge in this case, right? So as you can see here in this scenario, the high is
Yeah.
around 46,000 and low is around 40,000. So the points, target points is 6,000 points. This scenario,
Yes.
6,000 points from here. Right? So that is around 34,000. So it went till around, you can see that 32,000. But we have to exit as per the targets, right? Around 34,000 here.
Yes. Around there. Yeah. But with this, isn't it? You need a bit of high capital because if you can blow your margin if there's a fail.
No, your stop loss will be here only, like very near. The risk is very less.
Yeah. Okay. Even though it's a daily chart.
Yeah. Stop loss will be always be here.
But can you also do it on like a 15-minute chart?
15 minutes you can do. 15 minutes you can do it. Okay, let's try to find on 15 minutes
Okay.
if you can see that. 1 second.
Yeah, maybe if there is on gold or something. Is this a good pair? Nifty IT index.
Yeah, this we use in India.
Oh,
See, here it is trying to form that kind of pattern as you can see here. It may form that pattern, but it's not yet confirmed. You have to see the trend line, right? You have to see on the trend line.
mm-hmm. So you think it can go down?
So whenever it goes down from here, you can try to take an entry. Yes. You have to wait and watch. 15 minutes
Okay.
start. Right. See here you can see, right? Kind of here breakout pattern, right? Yes. So target is around 4,700 minus 4,900, 200 points. So you got it here.
Okay. Yeah. That's an inverse.
That's inverse. I will show you a failure also, a failure of inverse head and shoulder pattern. So, yeah. See, this is trying to retest. This one is already breakdown here, right? You can see. Uh, breakdown. See here. Here there is a kind of breakdown, right? Yeah. So here it is a breakdown. It will try to retest, and then you have to short again from here.
Oh, okay. So it's how is it? Is it like this?
You can use it on the trend line.
Like,
Actually, you can use it on the see. Every time it may not be perfect, but you have to just see.
okay, so yeah.
Okay, so every time it may not be perfect. So sometimes you may have to just see it like that, right? Right.
Yeah. Mm-hmm.
So every time you may not see a perfect pattern, so you have to decide and take a decision on that.
Okay. Yeah.
So this pattern is clear to you. I'll show
Yeah,
you.
this pattern.
Do you want me to show some more examples on that?
No. Oh, we can.
Sometimes we have to see on the this thing trend line also, right?
Yeah.
So you want this is shoulder 1, this is head, this is shoulder 2, right?
Yes.
So this is formed. This is getting formed at an angle.
Okay, and this is now supposed to go like this.
Here we have to see some kind of breakout. Yes, correct.
Okay.
See, here it gave a breakout, but in the next candle it came down. So there was a rejection here. You can see rejection.
Yeah. The candle after didn't close above.
Yeah. So that's the reason the practice is important. Okay, this is clear. This pattern.
Yeah, it's clear.
Okay. Now we will talk about symmetrical triangle pattern, right?
What is it called?
Symmetrical.
Okay.
Symmetrical triangle.
Okay. Yeah.
Okay. Pattern, right? So see, the triangle will be, if you draw like this, the triangle will get completed here. Here, right?
Yes.
So what we have to do in this, all the candles will keep on forming within this triangle, right? So now it will continue forming like this also, and then will be a breakout or a breakdown here. So we have to wait for this point.
Okay.
Yes. A breakout or breakdown.
Okay. Breakout up.
Up and
And
breakout down. Yes. So whenever there is a breakout or a breakdown, you have to an entry here.
Okay.
The candle, based on that candle, you have to stop loss will be here whenever there is a breakout, and target you can consider this distance.
Yes. Okay, this distance. Huh?
This distance, yes.
Okay. Okay, so yeah.
Okay, so done.
Okay.
Here you can see the breakout already happened here, right?
Yes, I can see.
So now there are two ways you can enter this trade. Okay. Either you can buy once it crosses the high, okay, or the test.
Then you can buy.
Yes. Don't buy now because now the candle is somewhere in the middle, right? Either it has to cross the high or it has to come here for the retest.
Okay.
Because your stop loss will be here only, here this area. And target will be this distance, which is 2400 minus 1600. 800 points, right? 800 points from the breakout area from here means approximately it can go till here.
Yeah.
See here, there was a resistance, right? You can see the previous resistance is also there, right?
Yes, the previous one.
So the first target has to be this, second target this, and after this, if it gives a breakout, then it can move further. So you have to see the previous resistance also.
Okay. Yes.
See the resistance can be parallel or the resistance can be at an angle.
Okay.
In this scenario, so every time, most of the times you may see a different scenario also. See the pattern is same, the logic is same, but based on the candles you have to see how it is getting formed.
Yes.
I'll quickly show you one more example.
No problem.
See, here you can see there was a breakout already. Yeah.
So if the next candle is breaks above this, right? Then you can buy.
Yes, high. Once it crosses high, you can take an entry. First resistance is here, second resistance is.
And this is the target. This minus this.
Yes, approximately you can consider. See the resistance also, right? So next resistance is here. So you might need to exit here sometimes around 80, 81, 82, somewhere 82.
Okay.
So this you can use even on 15 minutes. Because this
Yes.
pattern is quite common. Let's see if we can find it in gold on 15 minutes. This is all consolidation going on in gold, right?
Yeah.
See here you can see there was a small formed here, right?
Yeah. Then down. That's down. Yeah.
Yeah. So this pattern is quite common. You can see even on 5 minutes, 10 or 15 minutes. This is a very common pattern, and you can do scalping also. If you want to use this pattern for scalping, so this pattern is good for scalping purpose.
Okay. And where do you put your stop loss here?
Once a candle closes here, near this, because This is a very small one, right? This is a very small triangle pattern here.
Yeah.
The low of this candle, you can keep your stop loss. The low of this candle.
Okay.
And here also, as you can see, there is a small support. This is a support area.
Yes.
So
okay, so you could just have the break with it.
Yeah.
Yeah.
So two patterns are very good for scalping. One is rounding bottom, and the other one is this one, symmetrical triangle pattern.
Okay. Yeah.
So on 5 minutes, 15 minutes, 10 minutes, you can try to use these two patterns because these patterns are found very quickly. Compared to head and shoulders and cup and handle, they take quite a long time to form.
Yes. Okay.
Okay, so this clear? Any doubt in these patterns?
No, nothing with these.
Okay, fine. Fine, then I think mostly we are done with the patterns. Next class we will start indicators.
Indicators. Okay.
Yeah.
Yeah.
Fine.
Okay, sir.
So when do you want to take the next class?
Let me just check. Wednesday in the I've got exams this week, so maybe Friday in the afternoon.
So actually, same time can we do on Sunday, same time?
Or we can do Sunday. No. Or Friday, yeah. We can do Friday morning.
Friday morning, same time, right?
Yeah, same time, Friday morning.
Fine. We'll connect on Friday.
Okay, sir.
Okay. Thank you.
Thank you.
Bye.